Good weekend all. Ira Epstein of Linn and Associates with your weekend edition of your SPDR ETF video for this Friday, the 22nd of May, 2020. Memorial Day weekend. You all have a great holiday. I'd say travel safely, but most of us are probably going to stay right in our own neighborhood or home, as social distancing is still an issue for most of us. A mixed day. You can't go by a lot today in the markets as you've got a 3-day weekend. Outside influences can come about from the Hong Kong situation with China. As you probably know, China today said their first, something expected, they weren't going to release a GDP number for this year. But what was unexpected is they're going to clamp down more on Hong Kong. Hong Kong's been in their gun sight. They wanted to try people in Hong Kong for certain crimes, bring them back to the mainland. People revolted against that. Remember the sit-downs in the universities? Well, now they want to bring in their agencies, their security agencies, and I'm not talking just financial security, I'm talking their security agencies into this financial hub, and believe me, it is not going to sit well. So expect more of the same. I'd be shocked if it doesn't happen, but we'll see how it all plays out. And of course, then you've got to worry about what's going to happen in Europe at the same time, because our Memorial Day is not celebrated with all those holidays. So as we go to the charts, remember on the weekend edition, we're going to just look at weekly charts. Bigger picture. There is a gap in this chart right up here. The market's reaching for it. I would be surprised if it doesn't fill it. And then once it's filled, I'll be surprised if the market doesn't do a bit of a rollover. It's like, I filled that gap. Let me go. When we take a look at the swing line, it is certainly bullish. Higher lows, higher highs. The market has been now over for 3 weeks. The 18-week moving average of closes, bullish again. The bias is up in the market. And the upper Bollinger Band is actually at new highs for this move. So if the market wants to reach for that, you'll be at new highs. Remember, this market, QQQ, the tech sectors, powerful. The FANG stocks, certainly on fire and staying that way at this point. They haven't backed off at all. When you look at momentum, it's pointing up. And on the weekly charts, when I look at stochastics, I don't look for overbought, oversold, or embedded. They're either pointing up, they're pointing down, or they're neutral. Therefore, momentum up, bias up since you're over the 18-week average, and the swing line up. Gap is where I'm looking for the resistance to come in. When we come over to the industrial sector, we still haven't made it to a 50% retracement number. We know that you blew through that in XLK and QQQ, but other markets have been having a struggle. So you've been hanging here at this 38% correction. The pattern on the chart is one of a higher high, lower low, and momentum is flat. I don't see anything on this chart just yet. What could turn the trend back down is taking out this week's lows. If that were to occur, you'd have lower highs. You already have the lower low. You might ask, what about if you take out this high back here? It doesn't matter. You still have the lower low. So resistance, if you took out 66.22, would be 68.23, the 18-week average, and that's going to drop on you. That number's been dropping almost $1 at a shot. Do you see that? So don't be surprised if it's down 70, 80 cents on the first print come Tuesday. We won't be open Monday. Energy sector. I'm still looking for this market to have trouble at the 18-week moving average of closes. It is not uncommon for a market to go back to a neutral point on a chart. I consider the 18-day moving average of closes, the 18-week moving average to be those neutral numbers. So 40.46, you're at 38.48, not too far away. QQQ still on a run to the upside. Now here you have a gap too, and you're filling that gap. So be careful here. Once gaps get filled, I know people think, that's it, it's just going to keep going. It could, but there seems to be, as a chartist, I watch these, and once they get filled after coming all this way, sometimes they just run out of steam. We'll see if that's going to be the case, but the trend up, bias up, momentum up. Until it's over, it ain't over. In EFA, which is the emerging market ETF, this market has still got the pattern it's had it, higher lows, higher highs. These markets as a group are staying under the 18-week moving average of closes, which keeps the bias down in all these markets. So you don't have the signal that goes with the swing line pointing up. Momentum has been drifting to the upside as well. When we come to GLD, the pattern is one of higher lows, higher highs, momentum still up, still very friendly on this market. Resistance 167.68. If you took out 158.10, the market would go into a stall pattern. You'd have a higher high, lower low, might even drift to 153.90 on that. In the gold miners, you still have momentum pointing up. You've still got the higher lows, higher highs, but notice how this market's turning away from trying to hit the upper Bollinger Band. You were down about 2.8% on the week. Nothing here to say that the trend is over, but pulling back a little bit, maybe running out of some steam. On TLT, we have a pattern of lower highs, lower lows. It's thwarted in the downtrend since the bias is up when you're over the 18-week average of closes. So bias up, swing line down, momentum drifting, not really pointing to a downside just yet. Then we get to the FXE. So when I'm looking at the euro, the last time the market, and each time it's been hitting this 18-week average, it's thrown back to the downside. Momentum is finally just sort of rounding here. The bias is down. The trend is up. You need to close over that number to say that the market is going to be friendly. So you'd have to get over 103.50 on a closing basis. And just simply, this market doesn't want to respond and stay over that number. So I'd be very, very cautious about this in any way that you want to go. So with that, I'm Ira Epstein, and I do want to remind you that if you like trading spiders and ETFs, in my afternoon spider subscriber video, we started off with 27 charts. We're up to 33. We just keep adding them. The subscribers are asking for more and more, and I will do it to a finite number. I don't want the videos to become an all-day affair. That would not be what my goal is. So I'll add a few more as we keep going, and we did add a group of them today. In fact, all week long we've added. As I said, we're up to 30-some-odd charts now, and I will add a few more as time goes on as the subscribers ask me to do it. But the goal of that, it is to set you up for the morning trade. Now, ideally, you're looking at my morning subscriber video for futures. Why? Well, as you all know, the futures markets, they trade a lot more. They open at typically Sunday, 5 o'clock. They quit trading for an hour each day until 4 o'clock on Friday. Then they open again Sunday. So it's 23 hours a day. As you know, a lot of the different ETFs and the ETFs certainly look at the futures market. The spiders, well, they're different sectors. They won't. And as I said, more charts than that. As we've done this now, we keep adding to the list, and I'm going to have to change this ad because I want it to be up to date with what you can see that we're offering. And it's fun. It's that simple. So in the afternoon, I give you an idea what to expect. In the futures update, I again am talking about what the markets want to do. Let's assume you had a big up move in the QQQ, which is the NASDAQ. Well, you want to know that for what the trade's going to do. What's the setup look from the afternoon before, and what's that going to mean to the market now? You can find out much more about this by going to our website, www.iraepstein.com. Under the word research, it tells you about both the morning subscriber video. It tells you about this particular video as well. You can click here. That'll take you right to that video page as well. I'm Ira. Enjoy your Memorial Day. I'll see you all come Tuesday afternoon again. Have a good holiday.